There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome, Auvorians, to the Saturday Software Broadcast session. My name is Steve Vetterl, Risk Manager and Explainer of Craziness, at least this weekend. So, you are looking at a Google search of SBF. And I think what, unfortunately, for many across the globe, will become an acronym synonymous with fraud. As I'm pretty sure this house of cards, which is going to take a while to sort out, will prove to probably be the size of Bernie Madoff Investments. So if you're not familiar with any of that, you can certainly Google it. I show the screen not to take a victory lap from my disdain with crypto over the last few years, but more as a cautionary tale of why, again, risk management really from a business perspective should be one of the top practices that you implement, outside of learning about the business, obviously, or the business of trading, should that be, or portfolio management. But essentially just always asking questions of, and if things seem to be too good to be true, that they probably are. So if you've just joined us on planet Earth in the third dimension, I would say welcome. We wake up on a weekend morning to learn that a very large, quote, Super Bowl type of crypto exchange is completely imploded. And I think as pictures emerge, which I've already seen some just ludicrous stuff of their operations, and or the nefarious activities of said individuals, they've sucked a lot of celebrities down a just a serious black hole. How to figure out this, I have no clue. I would say that for all of those out there that have money or have put money on this exchange, you could probably pretty much forget about it. And, I genuinely hope, probably more so than any statement I've ever made like that I'm wrong. So this is the problem with gurus. This is the problem with putting too much people in that light, right? Bad things can happen to one's both health and wealth in these arenas. There's numerous examples over history. I'm not going to spend a lot of time droning on about this. I would just encourage you guys to learn from it. On to happier times. So, happier times, you say, well, I don't know, maybe it isn't. But look at this. Clients calling into first down. Hey man, why is the market like totally ripping? I know you guys are bearish. Yep. One reason. We had a slightly less inflationary release on Thursday. Sent, this is why you never want to be too short something, obviously, right? Sent the equity markets globally on a rip for the ages. A king, queen, if you will, of dead cat bounces, right? I think it'll be short-lived. So I actually put something out on Twitter that strategically and tactically in many client accounts that either didn't agree with us or, finally got some sort of offsetting cost basis. We took a bunch of profits on a bunch of equities and again used opportunities like yesterday and the day before to lighten up in portfolios. So I try to be real big picture about what we do. I can't really get into the weeds about the specifics of how it's done. Obviously, it's trades, right? But I mean, we really can't elaborate on that because technically it's illegal. So it's called front running. It's almost like just trying to like talk your book up, for lack of a better explanation. Really, just sticking big picture this weekend. I don't really have much to say about all this crap. It really truly is crap, quite frankly. We've got an inflationary cycle. We've got a election system that is in shambles in certain states. There's many things to be suspect of, right? And as many of you know, I always seem like I'm, sort of that dour guy. But most of the um, global business based mainstream media jumped on the FTX story and they really did their readers and their viewers a big disservice, in my opinion, because the signs were out there had they paid enough attention to it. And this is where newspapers are sold, obviously, and or financial, any kind of advertising rates come from mania, right? But there's probably going to be some really bad horror stories that come out of this from suicides and stuff like that. So, and that's the unfortunate part about this. So as a, learning lesson from all this, my kids often joke, oh no, here comes dad's teaching lesson, because they know it's coming, right? And it's going to be useful. But at the same time, don't put all your eggs in one basket. So we go back to diversification 101, a finance class, day one, lecture one, right? Be diversified. That's the key. Do not use capital that you can't afford to lose. If you had all your money in crypto and FTX completely sucked your, whatever, 30 grand out, you can be sad. But as I always tell people that will come to me for advice after some sort of really raging event of adversity hits them in life, breakup of a marriage, or many of these things have happened to a lot of my friends. The first and only piece of advice I ever give them is kill them with success. And that's exactly what the response should be to something like that. Yes, it's unfortunate. Don't lament on how long it took you to save. Go back out and be successful again. It's the best thing you can do. Put all the naysayers to bed, quiet them all down, so to speak. So let's move forward and learn. 13th is tomorrow. Sunday, and then we have obviously coming in on the 14th. Do understand, just as a side note to this, just looking at the calendar here, this whole week, I was not able to do the Tuesday broadcast. I was down with this, seems like worse than COVID flu, which you guys could probably still hear in my voice. And then the hurricane hit us on Thursday. It's like 2 hurricanes came rolling through Orlando. Who knew, right? And then neither of them were that big of a deal. It brought rain. We had to, have all our yards cleaned up and stuff. So, but outside of that, we're fine. Didn't even lose power. By the way, I'll tell you, not that I need any more people to move to Florida. My hat's off to the electric grid in this state. It is absolutely rock solid. I love it. Never had any issues during some brutal storms. I mean, we got the generator. Damn thing just didn't even need to be taken out of its packaging. So, but, you don't want to move to Florida. So, let's go into the news. So we know last week, we know it took place, we know why. Stay tuned on some of the other stuff as they begin to peel back the onion on this crypto stuff. I think the concern is at this point is, even if there was some sort of leveling out in the price of Bitcoin, as I've been talking about for the last few months, this news story just absolutely just torpedoed crypto. And I think there's going to be a lot of people just looking to bail, right? And, again, who knows? Maybe the tone will change. I still have my Coinbase account. But as I warned everybody on the stock, which by the way I have on the screen, as I warned everybody a long time ago on this stock, this is back, jeez, people are just buying this thing hand over fist, and I said, do not, under any circumstances, be an owner of this stock. Okay, now what shakes out from this? Well, if you're looking to own anything in crypto besides that BTO ETF, which has gotten absolutely clobbered since it came out last December, tells and stock prices are made, or actually in Forex charts or whatever, they're made on days of adversity. So right now, pretty decent rally off of this 45 bottom for now, right? So I show this, which is really not to tout or throw mud on Coinbase, but it's just another example of, in this case, it's a weekly chart, right? But see how the first huge drop of valuation, right? This is a previous crypto disaster, if you may recall. This is during a lot of the bloodbaths, and a whole bunch of currencies were just getting blown to smithereens. But remember what I said about how you always want to visit the low? Now, this wasn't a complete auction, in my opinion, but it got down there close. I would imagine there's a bunch of notches down there. So now, again, this is a weekly chart. Now, doesn't mean we buy, right? But it means somebody stepped in to defend it pretty good. Will it hold? If it holds, right? And if Coinbase can, put out some good PR, continue with some better numbers, which unfortunately I don't think is going to happen. So this isn't necessarily a buy, but I do like chart patterns like this as long as the business model behind it can support it, right? This could be a commodity chart. This could be a Forex chart, but I always am suspect on these serious bottoms that they're going to go back and be revisited at some point. This is a good chart example of that. So next week's news. I don't really think any of this matters. So maybe a little bit of this Philly Fed manufacturing index. Shout out to Philly, by the way. Go Eagles. 8-0. In any case, should say that we got some PPI action here. So this would be the producer price index. Obviously, anything that is CPI based, you're going to want to watch, right? Don't think a lot of this other stuff, quite frankly, matters. I think a lot of people in trader land could be wrong, right? Just looking at the volume start to really drop between Thanksgiving and New Year's. Why? Especially this year. I think a lot of people are just like, look, freaking had it. We're over COVID. Lockdowns are gone. All the airlines are moving without masks. We hope. Doesn't mean they fixed all the airline problems at airports. But I think a lot of people are just going to want to travel. They have the money. So I think volumes would be a little lower. Doesn't mean you can't take advantage of it, though. But from a risk perspective, you always want to kind of know where the headwinds of volume are playing out. And as we move into December, Christmas is on the 25th. Most businesses, for those overseas listening to this cast, are they're closed during this week. We will be too. We were actually doing a family trip out to California. We used to live for the holidays. So hopefully there's some snow on the ground. I doubt it, though. Let's go back to the charts. So I'm not going to really get into it. Again, let's make sure we're on dailies here. We're on all these weekly charts. So we got some really big stuff in terms of moving average land that we have not hit. And if you look during this whole period of time, notice I'm sort of bringing in the entire volume from just approximately the last, 11 months? No? Yeah. last 11 months that you can see that the point of control right here is this red line. It's 4120-ish area. This is the center point where all of volume took place. For those trading on MT4, any of the index space stuff, I would imagine if the melt up into Christmas, they call it the Santa Claus rally, is to take place, this is going to be your first target. We had a lot of volumes. We had a lot of overreactions. The rally that took place last week is almost 100% based on, yes, inflation came in lower, not by much, but it may have an effect, as the shorts were very much alerted to last week, of pivoting the Fed. I don't think that's going to happen. Jerome Powell was very clear, and if he had finished his statement with the following last time they raised rates, if the inflation was to drop 4 or 5 ticks or even half a point to somewhere in the mid sevens, is not going to curtail our tightening, this rally last week wouldn't have taken place. He's not going to get into that kind of weeds, right? But it's fun to prognosticate. Problem with that is most of the time you're wrong. So am I. So just stick to big prevailing macro themes. So looking at SPX, that's kind of where we are for NASDAQ. Looking at the index here, you can always study the ETFs, obviously, which show you the volume. I look at the index, could be the Qs, could be the IXIC, which is the index as a whole. Whereas this is their trust. It's basically ETF, just like the spiders. What do we see? Daily charts. Same thing. So it looks like this 11.5 is the big area. It's our last stop before the train headed south, right? Little teeny slingshot here. It's a great place to get short from a swing perspective. 11.538. Watch that area. Let's go into dollar. Booms are. Why do you think this happened? Again, daily charts. I'll wait for it. You guys can tell me. The answer is, when inflation comes down and the markets rally, it usually means there's a sell-off in the dollar. Why? Because inflation came down. If there's a sell-off in the dollar, what does that mean from a multinational corporation perspective? Well, one, they don't have currencies pressuring, from a lot of their global sales, right? And if the dollar comes down, it increases their currency effectiveness, which means they make more money. So there's a two-wind effect, in my opinion, as to why we saw rip, roar, and rally. So now, if one says, okay, Steve, well, let's take your past analysis and suggestions on the dollar and let's put it in practice, right? So then, in fact, that we are out of the upper range area, we're back down in this lower range, then your high very simply is right around this 109.35-ish area. Your low is 105 even. That is the range that I would see this in going forward. I wouldn't be surprised if it went down tag 105 next week. Remember, Steve could always be wrong. All right, so looking at the euro. I'll tell you, it's a big area of resistance right here. I'll tell you, we're at it. $103.50 area. Be interested to see if this holds. It's almost like this is broken from the DXY chart. Look, I can get it. They're not complete inverse correlations of each other, but I mean, we're at it. This is almost a short right here. Seriously. It's just too much unknown as far as tailwinds of all kinds of stuff. And for those out there saying, well, what do you mean by? So when you have, let's just call it a smaller asset class, like you have a blow up with a big hedge fund, or you have, some sort of commodity price just going haywire, right? Or the collapse of a large crypto exchange, right? You have rippling effects that take place in other areas. So you have what's called tailwind risk, right? Same thing if you're flying in a plane and you have, a lot of crazy winds. The you have to factor that into all of your trades. So just based on what I'm seeing, especially if you've made great money throughout this year trading, I would probably, given some really whack event, which you could certainly argue was the equity rally last week, I would be trading much smaller size to the end of the year or until things cool out. Because if there's another shoe to drop in any of this, it's just going to go nuts, right? Think of all the shorts like, this market's rolling over. We're going much lower than that. And they're putting on all these big trades, and then in comes a slightly lower inflation reading everybody wants to buy. I think it's ludicrous. I mean, these are the times and the mania, as I often talk about, these are the times you want to be selling into this kind of crap, right? Unless you got just absolute oodles of money and you can afford to lose and you want to take the dice roll instead of rolling snake eyes, you think you can, have like a really go for it, I just think that for most out there, that don't have that kind of capital to throw around, it just becomes a prophecy of learning how to trade and so forth. So, but I could spend hours running down that path, and I don't want to be all tangential today. So, yeah, we're at resistance. Maybe you better be taking these trades short. Let's take a look at a pound. It's the same thing. Obviously, dollar selling off, everything else generally rallying against the dollar, right? So that'd be the theme of this weekend. We know why. We don't know how long this is going to play out. I would imagine this 118.20 or 118.30-ish area. This is probably lifted last week. My suspicion was this was lower. We just had a big push, so it's lift. We're at resistance again. So this almost from an institutional perspective, both of these charts, if there wasn't this kind of tailwind risk evident, I'd be putting on some positions. Probably be pretty easy for us to go back down to 112 on this if inflation rears its ugly head again, right? Next couple of charts I am going to rip through. If I see anything, I'll let you know. US dollar CAD. I would say basically we're at some pretty strong support right there. There's 3 areas of confluence I see on this chart right here. Doesn't mean it's going to stop. Very strange to see the yen actually go up. Big move there. Big move there. Imagine some institutions got caught up. Look at this one. Oof. There's some support. That was fast. Interesting chart. These are all dailies, by the way, as we just roll through. Euro CAD. That's some big resistance, guys. And we're talking like 6-month resistance. We're at it. A lot of reasons for this stuff to stop and reverse right here. GBP CAD. Still some pips away from resistance up here at this 1.578 area. Aussie Canadian dollar. No surprise, dollar's been weak. See how the pin action plays out and all this stuff. GBP NZD. Let's take a look at spot gold while we're at it. Lift. Nice support. It's going to be a triple bottom on the daily. So the gold bugs will start to crawl out from underneath their shells, and the commercials on TV will start to come again. Let's see what else. Compass Diversified. It's kind of like a baby Berkshire Hathaway. I always check these two out in tandem. It's Berkshire here. We follow Berkshire if it breaks away from the S&P because it basically is a, what's sort of the word you use for when something else mirrors something great. I forget. All right. Now, it's a daily chart of Bitcoin. Let's going to take a look at weeklies. See what we can derive. Reset the scale. This by no means is a victory lap, folks. This is a cautionary tale that is happening in the real world. I personally, if we see this whole 16,000 area hold through all of this, what's that telling you? Now, by this, I mean it could take another 2 months for this to shake out. But for those long-term folks looking to rip through the ashes, right? Arguably, and some will say no, but arguably this is where we broke out for this whole run. So it would be, you can look back and see 1, 2, this is much lower, but this is almost the handle of the cup with handle chart, right? It played out over a long period of time, obviously, but point is you have a previous high here, right? Right around that 16 area. You don't have to be perfect with this. You could, have 1,000 or 2,000 point ranges to illustrate. We broke out from this point, and now we came back down to visit. So far, you would expect the first shot into that previous lower range from a long time ago to be defended. It was. So now we have to look to see, with all this craziness going on, if this holds, could be a buy. Buddy's like, I can't believe it. Steve said he actually may buy crypto. No, I may not. But what I would look to do is to watch, right? The key is we still have a bonfire going on, or a forest fire, whatever you want to call it, dumpster fire, which I always get a kick out of. I always wonder how if the dumpster's floating down a river and it's pouring rain, how's the damn dumpster on fire? It's called arson, right? But looking at the movements here, price action is always a tell for the future, right? The problem is that many will just dive in at this point saying, this guy said this on television, or Steve said this, or nope, this is not a signal to buy. But I could tell you the best time to buy is always at the end of a forest fire. It's tough. And the problem with those early purchases, you have to have tremendous patience, because it could be a long time before this ticks back up. But think, if it ticks back up to 20, done over 25% on your money, right? So that's a pretty good return to start. I don't know. I guess I just, you can see where the point of control line here is for this whole thing. It's, it's right around 9,000. 8,600 to the right here. It's the entire history of crypto from a volume perspective, meaning that where is all the volume executed? It's right around this area. If we were to tick back to all time, see the point of control actually drops down to 1,000. No, I'm not saying that is the long-term intrinsic value or floor. I don't know. I'm just looking at an analysis from a perspective of aggregated volume, of which, in all fairness, Bitstamp, Binance, Coinbase, any of these big, in many cases defunct exchanges, I don't trust the data. So you're not going to see me standing out there tooting a horn on, well, hey, look at long-term volume, point of control being, notice how that point of control just jumps right up to that, I guess we're probably what, 9,000 level. So yeah, when you just include certain data, but you're getting rid of old data, right? Arguably, that should probably be something like that, right? So then it has more modern data. Because who's really holding what they hold, what they bought in 2016 or 17, right? And there are some people in coin land that are, but this looks like the long-term valuation. Doesn't mean what the market perceives that'll be. I'm just telling you where all the volume executed at over the last few years. It's right at this 9,000 level. Doesn't mean it'll hold. Oftentimes it will stop and reverse at a place like this on any chart. Doesn't matter what we're looking at here in terms of crypto. So that is the week. I don't really think we should dive into anything more. If you guys want to go into, I have probably a good 4 weeks previous to this, where I spent almost an hour going through just a ton of stuff. Skip through the news parts in the beginning, right? And then just focus on a lot of these chats on, looking at just different chart patterns, how assume risk from one to the other. And I will wish everybody a great trading week. Hope you guys did not lose a lot of money in this debacle. And if you have, I apologize for the knuckleheads. And let us all be a lesson to go out and kill them with success. Have a great weekend, folks. May the trades be with you.